Mihir Vora joins in the studios right now. Mihir, hi, good morning. Good to have you on the show. It's literally Halloween today, and the horrors from last week still haunting us. But given the recovery that's played out and a meaningful comeback actually last two trading sessions, can we leave last week's horrors behind?
Yes and no, in the sense, first of all, I don't think the correction was any big deal. 5% from the top can happen
Well, it was just
anytime.
really swift, so it scared you a little bit.
Corrections always typically are sharp, and nobody likes them. And even the mid-cap and small-cap indices didn't fall more than like 5%. So it was not such a bad thing. People, I mean, you used to making a lot of money in a short period of time, and frankly, the last 6 months, if you see the movement in the mid-cap, small-cap, and especially the micro-caps, it was a vertical movement. So people are kind of conditioned to making money every week, and a couple of weeks of not making money, people are not happy. But I don't think it was any big deal. So having said that, there are risks in the horizon, and fortunately or unfortunately, most of the risks are global in nature. With the oil prices staying at high levels, not good for India. While we have managed the oil situation quite well by sourcing from different countries, but globally, I think we are in for a slowdown. Higher interest rates in the US and Europe are likely to stay for longer, and the situation in Ukraine and Israel is not helping. So there are risks, so there will be bouts of volatility, with the domestic economy continuing to do better than the global economy.
First of all, congratulations, new change. What's the idea? I mean, from a great franchise to another new franchise.
Yeah.
While this franchise is backed by great, promoters, the Seth family, FIIs, marquee investors.
Of course.
But it's still a fund. It's a new fund, and the Indian AMC market is very competitive. I've been told that there are 46 AMCs in India now. So why switch?
It's the passion and the joy of creating something. I've done asset management for long, so obviously it's my playground. And I think we can, with the promoter background and my experience, we can make a unique, combination of products and strategies to play around with. So, and yeah, while it's a crowded market, there is always space for excellence, which is what I think we are going to stand for. More to follow.
So how many schemes would eventually you be coming up with?
It'll be a proper, full-fledged, active fund management house. So we'll provide whatever is needed for the customers. Not everything together. It'll be in phases.
So where are those unique opportunities in the market?
In terms of?
No, in terms of where is it that you see investable opportunity in the market right now?
You're talking about a fund philosophy, or right now the sector and the economy?
Looking at the market right now, sectors, bottom-up approach, any rationale that you may have.
So as I said, the broad premise is that the domestic economy continues to do better than the global economy, especially the places and the sectors where government has sharp focus on. So in the last 3 years, what we have seen is that while consumption has picked up recently, the government has been going all out to stimulate in whatever way they can, whether it's by spending directly on infrastructure like roads. We have seen good rollout in the last 3 years, but also by promoting various local manufacturing opportunities, defense, spending on railways has increased by 3 times. Our railway budget used to be 80,000 crores. They've hiked it to 2,40,000 crores. So I think the central and state government spending linked segments like infrastructure, construction, defense, railways, sectors where government wants PLI, like manufacturing of electronics and durables. There are a lot of manufacturing opportunities there. Real estate is picking up after a while. So that is one sector we can expect. And even places like auto and auto ancillaries, we are seeing interest in PLI schemes.
Okay, so clearly investment-linked sectors is what you're talking about. And when it comes to financials as well, that's an area that you believe is likely to do well. Is it going to be cherry-picking? Are we going to see the comeback of some of those large-cap private sector banks that had taken a bit of a backseat? How are you looking at the valuation picture as well? Yeah.
Sure. So the thing is that if the domestic economy does well, then financials, especially credit growth, is typically multiple times that of 1.4 times that of GDP growth. So I do see a good growth in credit. So far, it's mostly been on the retail side. The corporate credit really hasn't even picked up. So once we see corporate credit coming, we can see maybe 15 to 20% credit growth. And with valuations for most of the private banks not really at stretch levels, I think there's scope for good outperformance even now.
So why are financials not reacting to numbers? Every financial, at least the big banks have come out with a good set of numbers. Small banks are showing a promise. Why markets are not going? Why rewarding them?
See, till about 12 months ago, you saw a huge outperformance of especially the private sector banks. So they're probably giving away some of that outperformance because it was massive. It was by far from the bottom of 2020 till the middle of 22, financials were like by far the best performing sector. So obviously there's some time correction happening on that front. Plus, it was too lopsided in favor of banks, especially private sector banks. So that again was a double, outperformance. So now we are seeing NBFCs catching up, PSU banks having caught up in the last 12 months. So I think it's a bit of a sector rotation within the sector.
You've alluded to the fact that there are risks and or concerns, but all will emanate from across the globe. So do you think in light of that, India can remain resilient or isolated, or the India story still looks strong in light of all of these concerns?
Absolutely on a relative basis. But what happens is, if there is a massive risk of environment globally, then we will not stay unscathed. There will be some impact, but much, much lesser compared to the rest of the world.
Mihir, you were just talking about the entire infra theme. You were talking about the government capex, defense, railways, roads. Is there frenzy in that pocket, as we've seen play out with some of these segments without mentioning them?
Certainly. There is frenzy, and most of these segments happen to be in small and mid cap kind of,
Exactly.
so which is.
And they've run up so much.
They've run up so much,
over 100,
and you see
100% year to date.
Plus, the retail is chasing not only directly but through mutual funds. You saw small cap funds are the largest category where money is flowing in. I think I saw some numbers, almost 4,000 crores per month in small cap funds last month. So there is a bit of a fraud there. I would not belittle that, not ignore that, and probably that's why you see some sharp reactions whenever there is some concerns in the market. But if you look at, say, a 5-year view, it is a structural change. So best thing to do is, the stocks are still good, maybe the prices are not that good. So wait for your prices. Market always gives chances.
No, but would you buy railways? Would you buy defense? Would you buy these stocks? Let's say you get a 20% decline, 15% decline.
Certainly.
Would you buy them?
Certainly.
You think a 3 or 5 cycle, there is a valuation risk, no cycle risk.
Absolutely.
Okay. Where do you think there is a cycle risk? Where do you think markets are assuming that this cycle will continue to it for eternity? I mean, a couple of years ago, all of us thought that infrastructure will be an eternal cycle in India. I mean, when pandemic hit us, we thought digitalization will be an endless cycle for the world.
Absolutely.
I mean, I never thought that this kind of a contraction will happen for IT services,
Correct.
but it has happened.
Correct.
Where do you think markets right now are mistaking something what is cyclical as secular?
First of all, we'll only come to know in hindsight. But I think in some of, for example, the commodities stocks, especially say chemicals and specialty chemicals, markets are not building in normalized margins. Maybe the margin expectations are still very high, I would say. So there is a bit of a cyclical element which is not being factored into chemical stocks. Having said that, I would still play them for the volume growth. So the manufacturing in India for chemicals and specialty chemicals, and India taking market share like we did in pharmaceuticals, that volume growth story will continue, but probably we should temper down our margin expectations.
Mihir, I've been wanting to ask this question, and I'm not going to get into trouble, but how much weightage do you give to brokerage reports which come every morning? Price targets, time period, how much weightage do you pay to them?
See, again, like in stocks, you need to be picky, right? You need to pick and choose. So there are some really good analysts out there.
Your favorite one is?
Will not endorse it.
See, the mutual fund industry, now that you're part of mutual fund, is very simple. You cannot comment on stock. You cannot give a stock specific view. There is no restriction on analyst and a brokerage view, right?
No, but if you see my Twitter timeline, most of the quotes are from brokerage reports, So there is some really good quality work going out there. There are good sector reports, good thematic reports out there. So I mean, you should.
Which is a good report which you've read of late?
So there is one on the electronics manufacturing report that I read from Phillip Capital. They have done extensive work there. Okay. So there are lots of reports like that, and I keep quoting from those reports.
Narrow escape.
Here's something I know you will be able to answer. What about the election impact and Indian markets?
Election impact, of course, the views as of now quite one-sided. So if there is any negative surprise on that side, there might be some volatility around that. But we've seen that, over the last 30 years, we've seen different combinations. We've seen a super majority, we've seen coalitions, we've seen weak coalitions, and we've survived. So I guess it should be okay.
Right. What explains this exodus from FIIs? I mean, are these largely global concerns?
The biggest thing is that, you're getting 5% on the US 10-year bond.
Yeah.
So that obviously is going to suck away some amount of risk capital out there, and the fact that when they go underweight China, they relatively need to rebalance the other countries also. So probably we are seeing some rub off of that also, I will guess.
This China plus one has become almost like a fashionable word. Stationery companies which are going public now are telling me that, look, we are benefiting because cheap pens are not coming from China. Seriously. Cello gets 15% of its business from stationery, and another one, Flair, I think, is going public. And when I spoke to them, I said, okay, how come you guys are going public? Bola, China se maal nahi aa raha. Now what we're making in India is actually true. The China plus one is great. Atmanirbhar Bharat is fantastic, whether it is EMS or chemical or just about every major category.
Correct.
But do you think markets are getting too excited about it? It's not that China is over, and it is not that India is where everything will shift.
See, the point is China is like 80% of the market in a lot of cases, or 90% even in some of the cases. China's single location factory in some segments is equal to India's output in that industry. So the scale is humongous. So even if we go from 90% China to 70% China, that's a trebling of demand. So that's the kind of opportunity we are looking at. I think our constraint is more execution rather than the opportunity out there. So if we make things easy, money will come in.
I think manufacturing must not be even 5% of GDP for us.
For us, value. No, I would say manufacture about 15% of GDP.
That includes domestic and everything.
Of course.
Export, I was not referring to exports.
Absolutely.
And for China, it's more than 40%.
No, we are, in services, we are close to 4 to 6% of global market share in services. Okay. In manufacturing, we are more like 1.5%.
So imagine if that doubles also.
Yeah, exactly.
Imagine that doubles also.
What about the weak links in the market? Will IT continue to remain in a slump? FMCG, rural facing, is that a pocket you should avoid for some more time to come? Although Marico was pretty gung-ho about what they're going to deliver next.
Correct. So you're right. In the sense, the Indian recovery has been K-shaped across, even within the premium segments, there is a K, with the super premium doing much better than the normal premium, so to say. So yes, FMCG is a weak spot as of now. IT, because of the global linkages, continues to be a weak spot. And global commodities like metals, etc., probably may also be relatively weaker.
But are they at the weakest point right now? Is this not the time to buy into those names?
No, global commodity, the steel stocks are not corrected that much.
No, IT, FMCG.
IT, FMCG. Look, pre-COVID, the IT sector was growing at single digits in any case. It's just that for 2 years, because of the COVID-linked, frenzy in spending, people suddenly working from home and shopping online and gaming online exponentially, companies realized they have to invest more in the digital infrastructure. Now, AI is a separate thing altogether, but if you look at that pent-up or that bunching of demand is now weaning off. And IT companies probably in the last 1.5 years over-recruited, for which they are now compensating, I would say.
So Mihir, let's divide the conversation in two parts. First, what is a mega theme for next 3-5 years? Chalta rahega, right? I mean, financials, banking, consumer, like chalta rahega, on a treadmill. And then let's look at some exciting themes. For example, EMS is an exciting theme. EV was and is still an exciting theme. Correct. So give us one mega trend. And you cannot use financials and consumers here. We've spoken about them 10 years ago, and I'm thought we'll speak about them 10 years after also. So one big mega trend which is different, and 2 or 3 exciting themes which could be more like 2 to 3 year bets.
Sure. So one mega trend is, I think we need to go back to the 2000s, so to say. Okay. Where the boom was really in infrastructure, real estate and manufacturing.
2003 to 2008.
Exactly. Okay. So and that was linked to some extent by a huge bump up in commodity.
Global commodity. China became hungry that time.
China commodities, China real estate. Yeah. So now I don't think it's going to be led by commodities anymore.
Okay.
So, but now we have seen that in 2020, China already has peaked out in terms of its population. Yeah. India, over the next 15 years to 20 years, India will supply 20% of the incremental working force in the world, which is second largest after all of Africa. Africa will supply a little more than India, but India will supply about 10 crore people in the next...
Skilled labours. Africa is not skilled.
No, population I'm saying, demographics.
Number,
just
okay,
demographic, not
okay,
skilled labor.
okay.
So India will supply 20% of the incremental working age population in the next 15 to 20
working
years.
age population.
Working age population in the next 15 to 20 years. China has already peaked out in 2020.
Okay.
Right? So if we provide the right conditions, and I think we are on the right track, like PLI, ease of doing business, etc. Manufacturing has to come to India, whether we try hard enough or not.
Okay.
It is for us to mess it up.
Okay.
We should not score a self goal. If we don't score self goals, I think there's a natural flow to India which will come in terms of investments, and that mega trend I don't think is going to change.
Okay. What about small trends? I mean, suddenly we are in a stage of the market where everybody is bullish on hospitality and hospitals both. Yeah, seriously. Hospital stocks have done well and hospitality stocks have done well. And the underlying theme here is that we will pay more first to consume, and then if we excessively consume, we'll go to hospital. Just think about it.
No, the point is, this is only based on local demand, right? We haven't really even exploited medical tourism. I mean, if you look at the healthcare system out in the West, it's atrocious.
Atrocious and atrociously expensive. Both.
Exactly, yeah. So India can supply so much of services for medical tourism, which is not even we haven't really scratched. But right now, even if you go to Gurgaon, for example, in some of the hotels where they have tie-ups with the Middle East countries, etc., rich Middle East countries, you see people, and they all come for medical tourism.
Is new age tech a no-go, or very selective opportunities maybe would be looked at?
No, certainly I would look at them, but new age tech is a broad term. There are individual business models we need to look at. So some of them have already grown to a scale where they can reap the benefits of networking effects. So there are companies with subscribers of 8 crores, with 8 crore active users or 50 crores actual subscribers. So those kind of companies would have networking effects which they can exploit, and that's franchise all done, and cash burn already coming down in a lot of those cases.
So network effect. So you're not looking at food delivery. You're looking at companies which essentially have a network effect. So that
like
would include Paytm.
Yeah.
That's a network effect. Mir, I'm sure you've seen this data, but I got this data on Saturday when we were doing Investor Mahakumbh, and the data is that India currently has about 25 crore Netflix subscribers. The current users of food delivery app are about 30 crore, but the mutual fund investors are only 4 crore.
Such a shame.
Yeah. And
such an opportunity.
This is when you've had the 10x multiplication in last 10 years in SIP. So imagine what you were 10 years ago and where will you be 10 years henceforth.
You're making me feel good about my decision.
That was the idea.
Industry.
That was the idea. So good luck and thank you for joining us.
Great. Thanks for having me.
Every time fund managers, they come on TV, we say that, what is next tip? So now that you're on this side of the mutual fund.
You can't. Great. Thanks for having me.
Thank you for joining us.
All right. That's the take coming in from Mihir Vora, talking about opportunity within investment-linked themes, also looking at sectors like financials.